Good space time, everyone, and welcome to a new episode of the Citizen Web3 podcast, your source for educational insights into the Web3 universe and your connection hub to discovering those that contribute to building the decentralized world. Today, we are joined by Matthew from Guardian Validator. We touch upon rodeos with crypto, poker, and trading. We talk about making mistakes, losing your knowledge, and winner's bias. Finally, we discuss profits, escaping velocity, and self-custody. If you enjoy our podcast, please share this episode to your favorite social platform to help us spread Web3 values across the universe.
I do think decentralization is a spectrum to a degree. I don't think Bitcoin ever needed an ETF, but we have one. So the reason being is not necessarily monetarily. I think innovation comes from trying something different. Bridge the gap between profit and what we would call ethical decision making. Yeah, I think poker players especially make excellent traders.
Hi, everybody. Welcome to a new episode of the Citizen Web3 podcast. Today, I have Matthew from Guardian Validator with me. Matthew, hi. Welcome to the show.
Hey, Serge. Thank you guys so much for having me. Really excited to speak about it. Yeah.
Glad to have you on. I usually do a small categorization of guests lately that I don't know why I picked up that habit, like saying, oh, we have game devs today or something like that, or and you are like more of Solana ecosystem. And I have to say, we don't get very, very, very many guests from the ecosystem, which is a big shame in my opinion, and we've been trying to fix it lately, like with a lot of other ecosystems, but no pressure. I'm gonna ask you do it. Sorry. I'm going to ask you to do a traditional thing and just introduce yourself. And what I mean by that, whatever you want people to know about you. How did you get into blockchain? How did you get into Web3? How did you get around to do whatever it is you're doing today, and anything else you want us to know about you, please?
Sure, man. Yeah, thanks so much. Yeah, I guess Solana ecosystem native projects. It is quite a tough space to interact with people. But one thing I can say about the Solana ecosystem is that everyone is really passionate and everyone is really motivated. So I think getting out there and chatting to Solana guys, and yes, I've been in crypto I've actually been in crypto since around 2016. But mainly the Solana space now. I think I learned about Bitcoin while I was at school. So I'm 31 years old now, I think. And I learned about Bitcoin and I kind of dismissed it off the bat, immediately. I was like, what is this digital money? This makes no sense. And I learned about it, but I've kind of ignored it. And then, as I got into college around 2011, I think it was, I took a little bit of a deeper look, but still didn't, purchase or jump in. And then I think my very first, and this is going to sound a little bit dodgy, but I think my very first Bitcoin transaction, I purchased some Bitcoin. I created a wallet and I purchased it. And the reason was to actually buy some cannabis seeds from Amsterdam. There was an online website where you could purchase cannabis seeds, and I was interested in growing cannabis back then. So it was kind of like my first introduction to Bitcoin. And so I did that. The seeds arrived. My plants died. It was a huge failure. But ever since then, I've had my eye on it. And I think it was a year or two later, I logged back into that same wallet. I think I put in I think it was probably $80, and I spent 79 of that $80. And I looked back and it was sitting back at $80. And that's when it clicked. So that's sort of, my introduction to crypto as I guess, unsophisticated as it was. But yeah, so that's sort of when I started to look at it. And I think that's sort of where my interest lies. And then I started investing. I started purchasing, all sorts of during the 2016 the 2016 pre-bull run, and then the massive blow off top in 2017. That was sort of my first rodeo with crypto. So I got into bunch of things, all the altcoins that don't exist anymore, and yeah, basically, just messing around, saw the potential, and since then, yeah, that's basically how I got into it.
I think that the amount of entry to the crypto world via Silk Road or anything similar to Silk Road, whether it was more subtle things like buying seeds, I think we are talking like 60 to 80% of people, in my opinion, like the cool people, let's say, right? At least like the
Yes,
people who end up doing things. um you know
yes,
le- le-
yes.
le-
It's crazy, and I think.
Go on, please go on, Matthew. Please go on.
Oh yeah, yeah, yeah. Just exactly to that point, and I have a lot of friends that got into it through poker, because cross-border payments were extremely tough, and poker guys would just instead of sending money and takes a week, they would just send Bitcoin. So yeah, exactly to your point. It's that sort of old, yeah. It was slightly dodgy, but also not. So yeah.
I also noticed that the poker guys, they make fantastic traders. They are so fucking good, really. Like I don't know. Have you noticed that?
100%. So I'm actually so I guess I haven't told my full story, but I went to college for to be a software developer. I did it for I think it was about 2 years, and I realized building business logic for other people was just draining me, and it was just not fun. And I sort of branched out into a sort of a new ventures investment. Sort of realm. I started working for a bunch of shareholders, and I learned a lot of business through that. And then, I from then I moved on to actually, doing quite well in crypto. And then I eventually started learning how to trade. And so I'm also a professional trader. And I can agree. So I used to play a lot of poker. And I can agree the mindset, thinking of things in plus EV, and your risk management, and playing the odds, sort of dismissing variance. I think that mindset lends really well to the trading mindset. And yeah, I think poker players, especially, are make excellent traders. I mean, maybe not myself. It took me 3 years to get profitable, but I know there are some guys who hop right over, and they do amazing.
I think risk management is like a super keyword there. I think I've been like well, I'm not gonna call myself a professional trader by no means, but I've been trading for many, 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 many years, over a decade, and not just crypto, but I've started with options back when it was a thing, but this was many years ago, really. And I think for me, as somebody who didn't come from that background, I came from a completely different background. Risk management was, and still is today, sometimes is a super complicated thing. I mean, I can make a lot of jokes about it, I understand it, but deep down, it feels like it's a very vital piece, I think, that a lot of traders should start
Oh,
from.
sorry.
And I think, like, yeah, please go on.
Agreed. Yeah. Sorry, you cut out there for a second, but you came back.
Oh,
Agreed. Risk management, in my opinion, is by far the most important thing to learn. Also, I think it's also one of the things that kind of clashes with human nature, and your emotions a lot. So I think obviously the psychology side and the risk management side ties hand in hand to a degree. So my methodology when I trade is I'm a systems-based trader. So basically, I'll develop a system similar to poker, where you kind of know what your expected ROI is. You know your win percentages, and obviously the past cannot predict the future, but you go based off statistics, and sort of that cut out a lot of the emotion for me. It made it a lot easier. You kind of set your take profits and your stop loss, if you will, and then you let it ride, and you just do that over and over and over and over again, based on statistics. So I think understanding risk is super important to that style of trading, and I guess all styles of trading. But yeah, I think risk, like you said, is one of the hardest things for people to grapple with. Not only because it can be extremely complicated, when you bring in leverage and your bankroll, as poker players would say. But yeah, I guess that is definitely my number one thing when people ask me about should I get into trading, I mostly say no. But if you are going to, make sure you dive deep into the risk management side of things before you even put a dollar in.
The funny thing is nobody does, right? I mean, everybody wants to be smarter than themselves, but I guess that's what
Nobody
leads
does.
to,
I
to
agree.
no, no.
Not even. Yeah, I didn't. I paid my school fees. I think everyone does. Everyone goes. If you haven't lost your account at least 3 times, then you're not a trader.
You know what they say? We say they, we. I don't know. Shall I refer to it as we's or they, or? But there is definitely saying in crypto, that if you haven't, lost your keys at least once, if you haven't forgotten your password at least once, if you haven't locked yourself out of a wallet you changed once, you're not using crypto properly. Something is wrong there. It has to happen. You have to lose some tokens. You have to lose some wallets. It has to happen. Yeah.
It has to happen, and this actually leads into sort of why I dived into the validator space a little bit. So what I
Please tell
actually
me.
yeah. So I found Solana at some point in 2020 or 2021. I'm not entirely sure exactly when, but I sort of looked into it, and I was super bullish. Really loved the idea. This network, this supercomputer network for everyone to utilize, and it's just a beautiful thing. So I really started to invest heavily into Solana, and I sort of really dived in, like 80% of my attention was on Solana at the time, and this was all on FTX, believe it or not. So I um, I made the mistake of keeping all my Solana on FTX when it went down. So yep, it can happen to the people that are the best of us. I mean, I'm very risk tolerant. I understood the risks, but I guess when you get comfortable, you get comfortable and you make mistakes. So I probably lost. I think 80% of my net worth on FTX, which was a massive knock to myself. And most of it was actually in Solana at the time. So I guess, yeah, that happened, and I didn't, it was obviously a hard knock, but I didn't let it take me out completely. I did have some, funds in cold storage that I can still trade with. So I kept trading, but I dived into the world of cold storage and hardware wallets after that, and I started looking. And what I found was and the reason I had all my Solana on FTX is I was loaning it there, or they were staking it, or something like that. I was getting probably like 6 or 7%, and I didn't understand staking on Solana at the time. And if I did, we'd probably be in a different place right now, and I probably wouldn't have a node either, because I would have just staked my Solana and been happy. So when I found out that staking on Solana is different from some other protocols, where you actually delegate your Solana to a validator, which then votes on your behalf essentially. So your Solana never actually leaves your wallet when staking. Um, Once I understood that, it got me interested, and I started, diving deep into what are validators, what is staking on Solana, how does it work, and yeah, I guess I was in a position where I'd lost most of my funds, and I wanted to, start something new. Yes, I've still trade to this day, trading right now, but yeah, it pushed me into learning about it, and once I understood it, I got super passionate, and I looked at the validator landscape, and I saw, there's potential, I wouldn't say problems, but there's potential value there that a lot of people are not taking advantage of. So that's what, the sort of the spin we're going on with our validator is, sort of looking at the economic landscape, and sort of sharing that with our stakers. So basically, there's two kinds of rewards, staking rewards on Solana, or yeah, I can just call them staking rewards. So Solana is actually inflationary. It started with the very first block in March 2020, and the inflation rate started at 8%. and it decreases by 15% per year, every year. Well, every epoch year, basically, which I think is about 182 and a half epochs. It decreases. So inflation comes down, and inflationary rewards are actually what stakers see as their rewards. So these newly minted tokens, they only get sent to stake accounts in proportionality to how much Solana is in the staking account, and obviously how well the validator is voting. So that's one sort of set of staking rewards that users get. And the other is not really user based, but more validator sided, and that's block rewards. And this is mostly made up from the priority fees that users pay to, prioritize their transactions. And so on Solana, 50% of the priority fees are burnt, and then the other 50% are given to the validator whose leader slot it is. And the leader slot is basically when it's your turn as a validator to produce a block. So those block rewards are actually increasing over time, whereas the inflationary rewards are decreasing. So Solana's inflation will cap out at 1.5%, after X amount of years, and the block rewards, as the chain is being used more, and as the ecosystem grows, the block rewards keep increasing. So we've actually taken an approach, and there are other validators that do this, but we've taken the approach of sharing our block rewards with our stakers. So that's sort of a spin, that's sort of the direction where we're going at the moment.
I definitely have some questions for you lined up in that direction, but I want to dig a couple of more things if you allow me. One thing, by the way, I want to definitely comment. While hearing your story about losing the funds on FTX, it reminds me somewhat of my own story, and not to talk about it, but to about the morale. And because from what I hear from you, it's the same morale, and I'm hoping that somebody's listening to this. If anything like that happening to you, of course, once again, I hope it hasn't. But if you do end up losing your funds, and doesn't matter if it was 5 or 10 year, progress or work that led you to build them up. Again, listening now to Matthew's story, to your story, Matthew, and remembering my own. I remember the words of my friends that got me out of when everything similar thing happened to me, 2019. You haven't lost your knowledge, and those simple words, I think, are essential. Like, and in your story as well, you lost 80% of your funds. You looked around, you look what I have, and you went on and you achieved more. And this is just for anyone that is struggling with anything like that. I think that remembering that if you lose everything you have, you still haven't lost everything you have, because it's you who has the everything. And people,
I love that.
we don't.
I absolutely love that.
Thank you. To be honest, it was my friends. It was my friends' words. But yeah, not mine.
Yeah,
but yeah.
I mean, I love those words, and that's the thing. I kind of glossed over it because it happened, and I've kind of moved past it now. But you're absolutely right. It is incredibly devastating. I remember the day or the evening that it sunk in that the funds were really gone. I kind of just drove to a petrol station, and I kind of just sat there at like 12 o'clock at night, just in the, quite everything's quiet, and I kind of just processed it. And it is extremely disheartening. I think I lost, I think it was 2.5 to 3 years worth of funds that I had accumulated. And it is incredibly tough. And I had one or two friends that lost some money there too. And one of them is not in crypto anymore. So it is a mental battle. And it is harder than it, people lost their livelihoods. It's nothing to kind of gloss over, but um, that's the thing. You haven't lost your knowledge, and if you've done it once, you can do it again. And it's just a learning experience. As it can be extremely. I don't want to downplay how hard it is and how devastating it can be, but it is. You can get through it. There is nothing stopping you. If you've done it once, you can do it again.
Matthew, let me ask you this. Let me ask you a little bit about the aspect of the sort of business side of the validator. And regardless of the stigmas around it, what you put into it, what is a validator business, whether, because there is all kinds of teams. There is, there are, shall I say,
basement tips with one guy. There are huge teams that have investors and so on. Before, like, deciding on that, I guess the geographical location a lot of the time plays a huge role. And South Africa is well known, for all the problems with electricity, issues with access to Starlink, and there are many, 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 many other things. Sorry. My question to you, what I mean, it's this cost kind of things stop a lot of people. I'm glad to see that it doesn't stop you guys. I don't know if there is a question there, but like, I guess what I'm trying to
Yeah,
get at,
I think.
why? Yeah, go on, please, 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 go on, please, go on, please,
Yeah,
please, please
yeah.
do.
I think I understand what you're sort of speaking to and asking. Um, so yeah, like you said, there are many different kinds of teams. There's these big, what would you say, like industrial validators. These big guys like Galaxy and Coinbase and Bybit, and then there's your independent validators. Then there's ecosystem native team validators. So I think there is actually quite a broad spectrum of how the sort of running a validator and what you're trying to accomplish with it. And obviously, like you said, the location is extremely important. So you are 100% correct when you say South Africa. We do have lots of power problems. We have something called load shedding. We don't have it right now, but we have it very often where your power will be scheduled to be cut off for a certain amount of hours per day, and to sort of shed the load, I guess, and give everyone a chance for power. And of course, access to Starlink with our government's policies. They're sort of talking about that right now. But yeah, I think so. We are a small team, so it's just myself and my partner. So we're I guess what you would call an independent validator. And yeah, so we kind of looked at it, and we sort of obviously did the economics of it. And for us, um, there's two approaches. There's doing it the best capital efficient way possible, and then there's doing it the absolute best performance decentralization, best for the network way possible. And I think we sort of took an approach that was, I would say, leaning towards better for the network but also capital efficient. So the best of neither world, but slightly more towards performant. So for us, South Africa is a tough place to host our node. So it is possible. There are data centers that have backup power. They have priority connections. So these things never go offline, and they've got a 99.999% uptime. So it is very possible to host your validator here. The only issue is it's expensive, as you can imagine. You're paying probably 5 to 10 times more than you would if you were to purchase the hardware yourself and host it locally.
Do you think that hosting locally is something more validators should do? This is actually a very interesting point for me. What's your thoughts on that?
Yeah, so in Solana, there's a metric stake centralization, I guess you would say, and that's like what percentage of stake is in your data center, right? And of course, if you're hosting locally, only your stake would be the data center, right? So um, spreading the stake around is very important. I don't think I sit on either side of the fence when it comes to you should be hosting locally or you shouldn't be hosting locally. I think there's pros and cons to both. And I think that, decentralization um, wouldn't be impacted too much if you didn't host yourself locally. But yeah, I guess that's where I would sit there. I'm not too passionate either which way.
I understand. I guess it's a big dear subject to the heart. So I'm curious. But what's I think more not more important, but it's kind of in the same direction, following from what you just said about decentralization. Would you say that the decentralization in general is a spectrum, and or would you agree rather with the saying that decentralization is a spectrum rather than there is just like decentralized or centralized, and depending on the situation there are all kinds of situations? And again, this is just not, I guess this is more of a general question from following up talking about decentralized staking.
Yeah, I think decentralization is a very hot topic, and it's usually, you've got maxis on one side and then people who don't seem to worry too much on the other. I Your question is very interesting. I haven't thought about it before, but I do think decentralization is a spectrum to a degree. So I can give you an example of something, one of these scenarios that you wouldn't consider, and it may make Solana look good, and it may make Solana look bad, but I'm going to tell it anyway, right? So recently there was so Solana has the validators have a client, right? And this client, so there's only one real client on Solana at the moment, which you would consider bad for decentralization. Of course, there's also Fire Dancer coming, and there's the Jitto client, which is the Agave client, but with a Jitto extension essentially. So what happened recently is there was a flaw. I don't know the specifics because I didn't actually look at the code, but there was a vulnerability. The vulnerability wasn't, it's not going to break Solana. It's not going to cause anyone to lose many funds or anything like that. But if exploited, it could have brought Solana down for a couple of hours. And we all know Solana has, had downtimes over the last few years. So what happened is this vulnerability was found, and now this is where we sort of speak to decentralization, right? So a lot of the validator community on Solana, especially the bigger stake community, they kind of all know each other. I wouldn't say everyone knows everyone, but there's places where we hang out and we discuss things. And so once this vulnerability was found, the guys that found it and the guys who were prepping to fix it, essentially they messaged all the super minority validators, and they sort of got them to patch and upgrade their client, their version, to sort of make sure that this vulnerability couldn't be exploited. And this was done sort of not in the public sphere. It was done privately. They messaged them. They all came to a consensus, and they all agreed that this, is, worth patching before, putting it out into the public, as putting it out into the public would, potentially allow this vulnerability to get exploited. And so what happened is the majority, the top, I think it was like 33% of stake had this patched in before they announced it to the public, and then all the other validators then upgraded the patch as well. And that was just sort of to secure the network. So that's like sort of an edge case where you would say, well, that's very centralized. If the super minority can kind of change things and do things without the public, that seems like a risk. But on the flip side, they're all sort of independents. They're all, they don't work together, but the code was shared open source. They told them, this is the vulnerability, this is our fix, look at it, and they kind of all came to consensus and agreed to patch it in, right? So I guess that's sort of on the spectrum of decentralization in a sense, but it's not directly tied to the chain itself. So I hope that makes sense.
It does. It does. And I would say that what it brings to mind straight away is, first of all, let me assure you that this happens on every network I've seen. And I've been validating networks since roughly 2016, since DPoS times. And it happens everywhere. And I think the word immutability, when used in relation to blockchains, has been very badly marketed, because it's not immutable. It is mutable if there is consensus to change it. So the question is, what
agreed.
requires the consensus? So yeah, it's like, Yeah, it's a thing. So I definitely agree with what you're saying. I think that and unfortunately, as much as I've dedicated pretty much like a third of my life to this or a quarter of my life to this, but I definitely think that the way sometimes we crypto folk use terms for the outside world builds a lot of fairy tales around them, and I rather it be as it is, and people are told as it is, and they decide for themselves whether that's good or bad. So, but yeah, that's just my take anyway. So I definitely agree with every word you said there. I think that's on spectrum.
Y-
Yeah.
Yeah, man.
Let
And
me.
yeah,
Yeah, please go on. Please comment. Please comment, Matthew. Please comment.
no,
There's
no,
just a
no.
small lag
Yeah,
between us. So.
yeah. So, yeah, I guess I was just gonna say, the validator landscape on Solana. I can't speak to too many other networks, but I would say Solana is winning on the decentralization front. But anyway, so let's carry on. Yeah.
Sure, it will be an interesting, I think, thing to see how it's gonna play out in the next 5 years, anyways. But yeah, what I want to ask you, the next question I have for you is a little bit, I guess, on current affairs kind of thing. I don't know if you, but you will understand what I mean in a second. Now, um, I want to know your opinion here, and I don't know if you follow like the latest crypto craze news, right? But lately there was this interview, and today, just again, this is for people who are listening to this in the podcast itself, the recording. We are now at the end of October, roughly 24 of October. But there was recently an interview with Sailor that came out, and that girl who asked him, and I want to upload, by the way, that girl, because she did a great job at asking him the correct questions. And this guy whose company holds the biggest, apart from Satoshi, stake in Bitcoin. And suddenly this dude says that we don't need what we need is actually centralized entities to hold it. And in my opinion, what happened there was really his true character coming out, and everybody who follows this dude or those things understands that it's not a surprise. The question that I want to ask you is, do you think that the whole recent comments from Sailor about self custody, do you think that this is where the future of Web3 and cryptocurrency is headed? Because a lot of people think, okay, it's players like him, like Sailor, who kind of decide where this goes, and a lot of people unfortunately listen to people like that. So my question to you is, I don't know if you heard these comments, but basically the guy just said that, yeah, fuck self custody. We need the crypto to be held by centralized entities. So, and it's hilarious coming from him, but expected. But anyways, what do you think about that?
Yes.
And where do you think it's going?
Yeah.
Sorry, go on.
So I actually did see it. Yes. I was a little bit shocked as well, to be honest. And I guess my reading from that situation is he's sort of this is now just personal opinion. Obviously, I have no idea what he's actually thinking, but I think I think what happened there is he's been so invested in sort of his way of doing things, and he's sort of got his methodology. I don't want to go too much into it, but basically, he gets investors, he buys Bitcoin on leverage, and he basically ends up having a 0% loan on that to pay back, and then he buys Bitcoin with that money, right? So I think, and then obviously his investors benefit via the MicroStrategy stock. So I think he's been so invested in what he's doing, and he's been so adamant about his methodology, and it's really working for him. So I think there's a little bit of winner's bias there, and I think he's sort of forgotten, what crypto is all about. And so yeah, that's sort of my take on it. Do I think that this is the direction we're heading? I'm not sure. I mean, yes, the trend is in that direction, and I think obviously getting into crypto self custody is not an easy thing to do. It's it requires effort and a lot of what's the word I'm looking for? It's there's a lot of weight on your shoulders. There's a lot of pressure. There's a lot of
Time.
time. and the responsibility was the word I was looking for. And I think, in the current world, I think people are not used to, having that sort of responsibility. They're used to banking, they're used to Apple Pay, and they're used to all of these things. And I think that's the trend. And now we've got a Bitcoin ETF. I don't think Bitcoin ever needed an ETF, but we have one. So I do think the trend is that direction, but I do not think that it's going to be a problem. I think, Bitcoin, in my view, has reached escape velocity. It's not going anywhere. It's established itself. It's proven itself, and I think if there are, I think there will always be people self-castigating and taking matters into their own hands, and I think people that don't will get burnt, and the cycle will repeat itself. And yeah, so I think the move towards freedom and the move towards owning your actually owning your assets, actually really owning them, and not you know what I mean. I think that will win at the end of the day, but for convenience sake, people will pick institutionalized yeah, you know what I'm saying.
I'm gonna change the topic to your validator in a sec, but before I do that, I wanted to follow in what we just talked about. For anybody once again listening to this, I'm gonna read and quote the one, two, three, the fourth and the fifth lines from the original Bitcoin white paper, just for everybody. Just to kind of memorize this. Digital signatures provide part of the solution. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double signing. That's it. I'm just going to leave it there. And, whenever people think about, what's crypto has to be, I think it's right here. But the main benefits are lost if a trusted third party is still required. I think people should really, it's there. It's the fourth line from the Bitcoin white paper. And I think people kind of let it go for some reason. And I hope that both me and you are wrong, because I'm actually with you on the train thinking that that's where it's going to go. But I really hope for us that we are wrong. So
me too, 100%.
I don't know if you want to comment that, or if you want to.
Yeah, you are 100% correct. And what's the point of Bitcoin then? People, I mean, there are other points to Bitcoin, but yeah, I agree 100%.
Okay, let me jump here to. I'm gonna play a bit devil's advocate
look what happened
right now,
with
Matthew.
FTX. Sorry, yeah.
Yes. Look what happened with FTX, man. But let me play a little bit devil's advocate here, and I'm gonna talk a little bit about your validator. And it's going to be the longest question statement I made, but I'm gonna try because it's in my head. But I'm gonna try and put it together. Sorry. So I am all up, and I think the way pro sort of decentralizing validators. In fact, I think that that's the way forward. We just spoke about it. I think that validators are the last centralized entities that are keeping crypto from becoming more decentralized, because every validator is a centralized entity with self-interest, and I'm saying it because I am one. So I know that my priority is me, is my project, is the success of it, is making sure that people eat, is making sure that whatever we do works. So we are a centralized entity. But I have seen lately a lot of, not just lately, but over the past few years, I've seen numerous attempts from all types of validators to create either some kind of economical, railway or a different, economical railway, which gives the stakers a bit more. Incorporate NFTs, incorporate DAOs, and many other things. I mean, I think the tools are still not there, but it's going that way now. Looking at Guardian, and I know it's still not full in motion. We spoke about it before the recording. What it reminds me of a little bit is there was a validator. I think they were called Orbital Apes. Yes, they were called Orbital Apes on Evmos. And they had a very huge launch with a very interesting mechanics, of giving money back to the stakers with NFTs and DAOs. And I think we even had an episode with these guys. And, they were very business motivated dudes and very. What I'm trying to say is that after the end, with all of that at the end, their experiment didn't succeed. Not in my opinion, anyways, it didn't succeed. Though the amount of resources that I'm sorry for it taking so long, but I promise it's 30 more seconds. The amount of resources that it took them to achieve what they tried was, and I don't mean money, I don't mean materialistic resources. I mean the effort was gigantic. Now looking at it back now, and this is where I'm coming to you. Do you think that validators, because there is two types, kind of, more or less, you can always divide into different types, but there is one way of dividing it. Validators who just come and say, hey, we're just going to do the traditional thing, we're going to provide some infrastructure, I don't know, maybe we're going to commit something to the code, and yeah, this is our kind of our thing, we're going to find some early stage testnets and grow with them. Then there's the second type of validator, more like yourself, myself, to be honest, and a lot of other people who try to not reinvent the wheel, but do something different. And it seems that sometimes, and again, I'm playing devil's advocate, but this is the question to you: do you think it's worth that effort? Do you think that what you guys are doing, what other validators that are trying to think outside of the box of just, hey, let's provide infrastructure and just get staking rewards, is it worth it in terms of them running a business? So it doesn't matter if they're independent or enterprise grade validators.
So I think it's definitely worth it. So the reason being is not necessarily monetarily. I think innovation comes from trying something different. Number one. Number two, I think doing what's right for the ecosystem and for the network is extremely important. I think if you kind of just follow the status quo and go with the flow, you're not really sure you are contributing, but there's no you're incentivized to make the most money possible. And I think it is definitely worth it to try and bridge the gap between profit and what we would call ethical decision making. So I think that's important, not only I do think that, I'm going to make, we're going to make more money in the long term doing that, but I also think that it's going to benefit more people and the network itself. So yes, there are, I guess, more risks, and yes, it takes a little bit more effort, but I do think it's worth it at the end of the day. And I think even if we fail, even if a team similar to us fails, I think it was worth it. And I think, doing what we can for the network and its backers is the most important thing. So yeah.
Thank you. Do you think that can you talk a little bit about because again, I didn't go very deep into what you guys are planning, but I've noticed, like you mentioned, at the beginning of the conversation, returning, sharing some profits with the stakers. I've also noticed some NFTs there. And do you want to talk a little bit through the system you're planning, or how is it different from others?
Yeah, sure, I'd love to. So, I guess we've already spoken about, this sort of two forms of income that validators help provide, right? And that was the inflationary rewards, which go to stakers, and the block rewards, which go to the validator. So there's actually no way to natively share block rewards with stakers as of now on Solana. So basically our approach, right, is we've created we've created a NFT collection that is essentially a share of our block rewards, right? So how it works is, each NFT is worth 0.03% of all our block rewards, and every epoch when we get paid our block rewards, we distribute those payments to the NFTs. And the reason we did this is, I guess, obviously to raise some funds. Validators on Solana pay vote fees. So a validator on Solana votes every 400 milliseconds, and it costs 5,000 lamp ports to vote. So that adds up to about 0.9 sol a day in vote fees. So we wanted to raise some additional money to be able to cover our initial vote fees, as we pay almost 1 sol a day to vote. So that was goal number one. And then goal number two was to be able to share these block rewards with the people who supported us from the beginning. That's just the NFT section. We actually believe that sharing block rewards is real value. So there's inflation on Solana. If you stake, you're not necessarily beating inflation. So are those true rewards? You're kind of, yes, you are beating inflation a little bit. The inflation rate is actually around 5%, but because only staked Solana receives the inflationary rewards and not all Solana is staked, you get a little bit extra on top. And that's why we're kind of seeing between 7 and 9% staking, APY staking rewards at the moment. So you're just beating inflation. That's not real value. Real value is, capital made from the service itself, which is the block rewards. So sharing with that to stakers is important in our view. So we have another product. It's not really our product. It's a decentralized product. It's just a liquid staking token. I'm sure you understand them. And basically, what we plan to do is share 50% of all our block rewards with the holders of the liquid staking token. This can be done directly via us sending the funds to the stake pool reserve account, and that automatically gets distributed to the stake accounts inside that pool. So we plan on sharing more than half of our block rewards with the community, regardless if we sell any NFTs or not. But what makes the NFTs really cool is that you're earning block rewards, not staking rewards. So, as block rewards increase in the future, so will your rewards. And as we get more stake, so will you. So it also creates a community around our validator. It incentivizes, holders of these NFTs to stake with us. And I think it builds a good ecosystem of, everyone, working towards the same goal.
This was actually my kind of like next and last question before we're gonna jump into a small blitz. But just before we go to that, I think here is I'm gonna share something a bit silly with you. I think we as a validator, by the way, we started to purchase stakes, and I'm talking about like minute stakes in every other possible validator. So I had this idea, so why not? Somebody is gonna make it.
Yes.
So we decided whenever we see like other validators selling stake, we decided, okay, we need to have an account for our validator where it's full of other validator stakes in other validators, whether it's in their DAO, in their NFTs, in their, I don't know, whatever. And so I don't know how it's going to happen. So we're definitely going to look at your NFTs as well. But this is just to say that. Don't be surprised. Yeah, go on, please.
That's amazing. Please. So, yeah, can I? Yeah. So there are other validators on Solana that do share block rewards, right? But we see the way that it's happening, and we think we can improve on it. So there's commission that people can take. So you can set a commission on your validator to take a percentage of the inflationary rewards. So what we've seen some validators do is actually set a commission, but then also return block rewards, which is kind of a little bit backwards in our view, as you're kind of making up the money you're giving away with the commission. And then there are some other guys that do it in a different way. But yeah, we think it's really important to be open and transparent about it. But to get to your point about owning other percentage of other validators, I love that idea. I've actually purchased other projects and other validator ecosystem native products as well. So I think it's a great idea. I think just improving the entire ecosystem is always great.
Nice. So the last question, you kind of started to talk about it already during the last answer and now the comment, but basically a very quick question, which I find validators to a big, it's a challenge for validators, and I don't know why, but it is a challenge. And my question is about community. What's your sort of go to market, say, strategy? Once again, I say go to market here because I know you guys are still unraveling yourselves. Or what sort of, maybe you saw something that you wouldn't advise or would advise to other validators to do when it comes to trying to build a community around your validator?
Sure. So I think so like I guess you touched on this point earlier where there's different kinds of validators. So there are validators that just run their node, they get stake from stake pools and potentially stake from people that find them along the way, right? And maybe some institutional stake. And then there are public facing validators that are, active in the community, and they share their thoughts, and they, share their what they're thinking, and they get feedback. And I think creating a community around, so for us it's about creating a community around educating people firstly, and then secondly, doing the ethical thing. So there's something called SIMDs on Solana, and it's in Solana improvement documents. And basically what these are validators can vote on them to make changes to the network. And I think for us, it's about giving our community the option to have a say in these votes. So when you delegate your Solana to a Solana validator, you're essentially trusting them, with your vote. On top of the consensus votes, there's also, actual voting that happens. And I think getting the community involved and educating on them on what these changes really mean is important for the network. And I think it's important yeah. So what I would avoid, just on a surface level, influencers. I would avoid, cheap marketing campaigns. I would, what I would go towards is what I would advise someone to do would be to grow organically through conversation, education, and just getting your voice out there. I think would be the two things that I would mention.
Nice, nice. I want to thank you for trying to say grow organically. A lot of people try to skip that part, and yeah, guilty. I think all of us are guilty a little bit somewhere in that. But to let me jump quickly to what we call the Blitz. You don't have to answer very quickly. It's sort of three questions to for us to finish the conversation and to take us out of the crypto world a little bit. So yeah, they're going to be a bit weird, but here they are. So first one, can you please share with me either a book, a movie, or a song that has had a positive influence on Matthew throughout his life, or in the last couple of years? Doesn't matter. Doesn't have to be a book, a movie, or a song.
I will go with a book. In fact, I'll go with a series of books. The author is Robert Greene. Um, 33 Strategies of War was a great book.
Okay. Something I haven't read actually. So once again, guys, the listeners, girls, robots, if you exist and you're listening to us already, check out the show notes, and you can find all the links, including the books and the projects we mentioned. And please go and have a look at what it is. So, second question, they're gonna get weirder, Matthew. I do say. So, second question, can you please share with us something motivational, what keeps waking you up every day out of bed, what keeps you trying to find innovative and more fair ways, I would say, of running validators, of trying to look at the world the way you look at it, something motivational.
This is a quite a tough one. I Something motivational. I think I was yeah, I was gonna say something. But I think, what gets me up in the morning for me, it's constant learning and engaging with my brain, I guess. It excites me, and then just doing what's right to help the world. Like I can't speak to everyone, but this is what motivates me is helping people in areas that they can't help themselves in. So I think just making the world a better place, And even no matter how hard you're down or what you're suffering, getting up and doing something good for somebody else will make you feel like $1 million and it will keep you going. Okay.
Absolutely. Amen. So one more, the weirdest one, I promise, is the last one, but it's a very weird one. So, dead or alive, made up or real person, could be somebody you know, could be a neighbor, a family member, a writer, an author, a coder, a project founder, could be an imaginary character, doesn't have to be real. So a character that is not a guru for you, or somebody who is not a guru for you, because I personally don't believe in them. I always say that. But a personage that you know, sometimes when you feel stuck, you kind of look up, not up, but you kind of look into the head of that personage, and it helps you, you know, to get out of the hole you're feeling stuck in. If that makes any sense.
Yeah, that is a weird one. I think I yeah, so there's a real person. I won't mention them by name, but they think completely differently to me, and sometimes I will just go and speak to them about anything that I will soundboard off of them, and during the soundboard, geez, I hope this answers your question. They basically frame my situation in a different way, in a different light that allows me to see it differently, and I think that's important. I'm not sure if that answered your question
It
or
does.
not.
It does perfect. It does perfect. It does perfect. It does perfect. And I want to thank you for the honesty, and thank you also for respecting the privacy of whoever that person is, because I think it's also important. Matthew, I want to thank you very, very, very much for your time and the time to answer the questions, taking the time, sorry, to answer the questions. Please don't hang up just yet. This is just a goodbye for our listeners. For the listeners, thank you very much for tuning in, and see you guys, girls, next week. Thank you. Thank you, Matthew.
Thanks so much, guys.
This content was created by the Citizen Web3 Validator. If you enjoyed it, please support us by delegating on citizenweb3.com/staking and help us create more educational content.